Hello and welcome. Happy Bitcoin Halving Day. Well, technically, it was yesterday here in the States, but in some parts of the world, it is today. It's April 20th, 2024. And today, I'm going to go over a little bit of things that have been happening in the world, as well as, of course, the Bitcoin halving. So, first, there's a lot of turmoil in the world right now. We have escalation of conflicts, new conflicts potentially in the Middle East. And now it looks like they may not become as bad as it seems like they might. Regardless, I think it's still a good time to position yourself in preparation for a lot of volatility when it comes to anything financial. I personally put on some short hedges on the major stock indexes on Monday of this past week, and that turned out to be a wise choice because stocks have pretty much cratered every single day the last, I think it's 6 trading days. If I recall correctly, there hasn't been either the S&P or the NASDAQ hasn't been down 6 days in a row since October of 22. So that's not a good sign. But there could be a reversal if the conflict magically resolves or doesn't escalate to the degree people are expecting it to. However, oil prices are expected to rise. Unless OPEC decides to really ramp up production, it's highly likely that oil prices will continue to rise from here. Although a few of the last trading days, oil actually went down a lot, and it went down in tandem with bonds and equities and Bitcoin and crypto, the other commodities, just everything. And that's typically not a good sign. I mean, we saw that during the COVID crash. We saw that during a lot of 22 when the interest rate hikes from the Fed started coming in. So this could be the beginning of some bigger kind of crash. But for now, I'm going to get into the Bitcoin halving here because no matter what's happening in the world, Bitcoin keeps clocking the blocks. TikTok next block is a common saying because no matter what happens, the network just keeps chugging along. So here we have an article that I wrote it was published on March 7th of this year for finance magnates entitled, "What is the Bitcoin Halving? Unveiling the most important event in Bitcoin's history." And summary says, the April 24 halving, deemed the most significant to date, will reduce the block reward from 6.25 Bitcoin to 3.125. The emergence of spot Bitcoin ETFs and the enhancement in regulatory clarity are distinctive features unique to the current event. That's right, this halving is different from all the others. Just in the Bitcoin ecosystem itself, it's different for many reasons. And it's also a different time in the world, going along with all the stuff I just said. However, 2020 was also quite different, so I'm not sure we have too much reason to be concerned as of yet. Now let's get into it. With spot Bitcoin ETFs having been approved the same year that the halving is set to take place, many newcomers may be wondering, what is the Bitcoin halving? It's a common question among those wanting to learn more about the protocol. Expected to be the most important event in Bitcoin's history, the 24 halving is expected to occur sometime on or around April 13th. It was forecast for April 20-something and then 13th, and then it wound up being the 19th here in this part of the Western Hemisphere. And that happens because it's not a time thing, it's a block height thing. So a block is a group of transactions that gets created approximately every 10 minutes, and the halving happens every 210,000 blocks. So this last one, this is the fourth halving, it occurred on block number 840,000. So that's why the timing can be tough to predict. And in this article, I cover all the basics of how the halving works, what it is, why it happens, and what it could mean for markets this year and beyond. I'm not going to go too much into the specifics of what it is and how it works because you can read the article if you like. I'll put a link in the description on YouTube, or you can just search my name, Finance Magnates Bitcoin Halving, and find it if you're listening on Spotify or elsewhere. Basically, Bitcoin works on a deflationary model where the reward for mining new blocks is halved every 210,000 blocks, like I said. It's about every 4 years, and that makes the oncoming supply deflationary, and is one of the reasons why all assets and currencies continue to depreciate against Bitcoin. There's a really interesting graphic that's been going around on social media lately showing that the price of a house, as measured in Bitcoin, has come down dramatically every several years. You know, it used to cost hundreds of Bitcoin to buy a house, and then it was, 50, and then half that, and today, let's see, say 60,000. I think the average home price is 300,000-400,000, or the median price in the United States today. So that's what, call it between 5 and 7 Bitcoin or so could buy you a house. That's pretty wild, considering that 10 years ago, 5 Bitcoin was worth maybe 2,000-3,000. So back then, it couldn't even really get you a sizable down payment on a car. In just 10 years, now it could buy a whole house. So this block reward is going to slash the reward. I already said that. Every halving so far, at least, has been followed by a notable increase in the price, although there's no guarantee what happened then is going to happen now. And here's an important point. Contrary to what some market commentators may say, the halving cannot truly be priced in before it happens, because a lot of the selling pressure in the market comes from miners who have to sell their coins to cover operating expenses in fiat. After the halving, that selling pressure is naturally reduced by 50% because miner revenue declines and they don't have as many coins to sell. So all else being equal, the supply goes down, the selling pressure goes down, and price has to adjust upward. That's the only thing that could happen, unless a bunch of whales from the past who had a lot of coins begin selling heavily regularly, or unless there's a massive black swan event like nuclear war or massive cyber attack or something like that, then it's almost guaranteed there'll be some increase in Bitcoin's price as measured against the US dollar. The price hit an all-time high against many different currencies all around the world well before it hit an all-time high in the US dollar. Just last month, I believe it was March 13th or 14th, the new all-time high was breached around 73,000. And that's a first in Bitcoin's history, because a new all-time high has never been seen before the halving. Historically, it's always happened about 18 months after the halving. So this cycle is unlike any others. Anyone preaching some kind of model saying, oh, this is what's going to happen with Bitcoin, it's based off these factors, stock to flow or whatever bands and technical indicators, it's all a lie. It can provide some useful insight, and in some ways that's the only way to analyze these things. I remember someone on LinkedIn asked me one time when I said technical analysis is 100% predictive of the past. And someone asked a reasonable question saying, well, how else do we analyze these things then? And, there's a point to that. But the point I'm trying to make is that right now there's a lot of people out there trying to, gain a following or finesse people one way or another just by sending the message of, oh, look, I know what's going to happen next because I have this model or this analysis method or whatever. When right now, none of that's true. A year ago, maybe even 6 months ago, you could have said that possibly and had some kind of ground to stand on, some kind of argument to make. Today, that argument, any type of such argument, is completely bunk. There's no truth to it whatsoever, because we're in completely uncharted territory now. There really is no telling. Bitcoin could drop 50% from here. It could go to 5 million from here within the next year or two. There's really no way to know for sure. The bias is to the upside. Obviously, that's what makes the most sense. But there's a lot of different variables going on. And again, this is just uncharted territory. We never had a period in Bitcoin's history like this. It's a unique year, unique halving, unique everything. So what happens to miners after the halving? Miners can struggle because they see a big reduction in revenue. Larger public mining companies can have a lifeline by accessing capital markets for further investment. Without a big increase in the Bitcoin price, some smaller miners are usually forced to shut down, and the hash rate tends to come down because of that. And that leads to a difficulty adjustment downwards, which then allows more miners to come back online because it's easier to make a profitable operation, since you don't need as much energy to mine the same amount of Bitcoin. The impact of this year's halving is the most important halving in Bitcoin's history. There's several converging factors that haven't been present during previous cycles. Some of these include the emergence of spot Bitcoin ETFs, increased regulatory clarity, a washout of many bad actors from the previous cycle like FTX, Celsius, Voyager, Vault, potential nation-state adoption of Bitcoin, El Salvador, and rumors of other larger countries potentially bringing in their sovereign wealth funds and whatnot, and corporate adoption of Bitcoin like MicroStrategy, other public Bitcoin companies. Some miners hold coins on their balance sheet. You got companies like Tesla and Block that hold some on their balance sheet. And in the past, the halving has been significant for the Bitcoin's price and the industry as a whole, even in the absence of the above variables. So it stands to reason that this time around could be astronomical, given the compounding effect of these new developments. That's just my take. That's my opinion there, really, but it seemed to me makes sense. In addition, because retail investors can now gain exposure to Bitcoin through ETFs, there could be ripple effects throughout the entire financial system. How this might take shape is anyone's guess. And then I cover a few of the more certain impacts of the halving and associated bull market. They're not really that interesting, in my opinion. Again, you can read the article. There's a nice little infographic here with those same points. And just the conclusion is that the Bitcoin halving is a pivotal event occurring every 4 years. And again, this was written in early March. So approaching it, there was a lot of anticipation for its potential price. And it does look like, the price has seen a small bounce just in the last 24 hours. Let me check right here real quick. Yeah, currently trading at 64.6 thousand. And that's significant considering it just dipped beneath 60,000 a few days ago. Yeah, on April 17th, the price briefly dipped below 60,000 for just a minute before coming all the way back up to 64.6. And that's down from the all-time high on it looks like March 13th, 14th, just over 73,000. So yeah, that's pretty much going to do it for this one. And again, you can read the article. I'll put the link in the description on the full podcast on YouTube and on any clips. And yeah, happy halving.